Paytm, which is one of the leading digital payments companies in India, has been ordered by the RBI to halt the operations of Paytm Payments Bank Limited. As per these orders, Paytm Payments Bank cannot allow users to deposit funds or transfer funds after February 29th. Now, before we dive deep into this topic to understand what is actually happening and why is the RBI restricting the operations of Paytm Payments Bank, please subscribe to our YouTube channel so you do not miss our new videos. First of all, RBI has not banned Paytm as a whole. It has put restrictions, heavy restrictions on the services that are provided by Paytm Payments Bank. Now, what are the services that we are talking about that are provided by Paytm Payments Bank? Now, these services include a Paytm Payments Bank savings account, a Paytm Payments Bank wallet, then you have FASTag, and you also have National Common Mobility Card, which is basically a card that can be used to travel anywhere using a public transport, specifically metros. After February 29th, customers won't be able to deposit funds into their savings accounts or their wallets, or they won't be able to use FASTags by depositing funds into their already existing accounts. And also, the nodal accounts of 197 Communications Limited, which is the parent company of Paytm, as well as those accounts of Paytm Payments Bank, are ordered to be terminated by February 29th, and the settlement of all of those transactions is supposed to be completed by March 15th. This is not the first time that Paytm Payments Bank has been under the radar of the RBI. It has been under RBI's watch since 2018, just 1 year after its launch in 2017. And even in March 2022, the RBI ordered to stop onboarding new users to its platform with immediate effect. But why has the RBI ordered Paytm Payments Bank at this point of time to halt its operations? The RBI has said that Paytm Payments Bank has not been complying with the rules and regulations of RBI. It has not been following the guidelines that are issued by RBI. And to be precise, the RBI is halting the operations of Paytm Payments Bank because of its persistent non-compliances and continued material supervisory concerns in the bank. Two of the major concerns of the RBI revolve around KYC compliances and IT related issues. Now, let us understand what are the issues with KYC compliance. Now, whenever you go to a bank, you are supposed to basically submit a KYC, better known as know your customer, right? The bank needs to know who is coming up to open up an account at the bank. If you want to avail the services of a bank, you need to submit your personal information, including your name, your number, your address proof, so that the bank is able to get a better idea of your existence, of your identity, and that is to be kept with the bank. The bank then keeps a record of your identity as a whole, and at the same time, the bank is also expected and bound to keep your identity safe, right? Your documents should not go anywhere else. Your personal information is not supposed to be shared with any third party member, and that is where RBI is skeptical of Paytm Payments Bank's parent company 197 Communications Limited. Now, Antfin, which is an affiliate of the Chinese giant Alibaba, is a significant shareholder in 197 Communications Limited with a stake of about 9.89%, and this is as per December 31st, 2023. So the RBI is suspicious of Paytm Payments Bank's customers' data being shared with the Chinese company and the Chinese authorities as a whole. Now, RBI has not explicitly provided this as a reason to basically halt the operations of PPBL, but given the recent developments in the relationship between India and China, this sure comes as a major concern for the Central Bank of India, the Government of India, and for the citizens also. Even in October 2023, RBI fined PPBL with 5.39 crore rupees, and that was due to lack of regulatory compliance. Now, as per the regulator, PPBL or Paytm Payments Bank Limited did not check and identify who really owned the businesses, some of the businesses that they were working with. Not only that, but they also did not keep a check on the transactions of those businesses. Furthermore, they did not assess how risky those businesses were. They even let some of the customers have more money in their accounts than allowed. Not only that, but they also took long enough to report cybersecurity issues. Now, what does this mean for the customers of Paytm Payments Bank Limited? Now, PPBL has over 300 million wallets. Not only that, but it also has 30 million bank accounts, and it also has over 100 million verified KYC customers. So the total customer base of PPBL is huge, and it is certainly going to affect many customers, at least for some time, especially the regular customers of PPBL. As mentioned earlier, customers cannot add funds or transfer funds after 29th February, but they can still use the existing balance that they have in their bank accounts. They can still withdraw that money that they have in their bank accounts or wallets at any point of time. So there's not a particular time limit that has been set on the withdrawal or the usage of the money that is already kept with PPBL. It is also important to note that customers can use other services of Paytm. They can still use Paytm money, which is broadly used for the purpose of investing in mutual funds or stocks. They can still use Paytm Gold used by customers to invest in gold. They can still use services to recharge their phones, pay bills. Not only that, but the customers will also be able to receive interest payments, cashbacks, and refunds, if any, even after February 29th. So there's not a deadline set on those services as well. And even though Paytm still has the license to provide all these services to its customers, it is down by 35% in the last 5 days. Not only that, but it also hit a lower circuit of 20% on Friday. In response to RBI's restrictions, PPBL has said that it is taking immediate steps to comply with RBI's regulations, including working with the regulator to address their concerns as quickly as possible. Not only that, but 197 Communications Limited has also said that it is going to accelerate working with other banks other than Paytm Payments Bank Limited, and that it is no longer going to work with PPBL. It is only going to work with third-party banks or other banks. OCL, which is 197 Communications Limited, is also going to focus on expanding its business of financial services by partnering with other banks. At the same time, Paytm's offline merchant payment network offerings like Paytm QR code, Paytm Soundbox, or Paytm machine card, they're still going to be active. Nothing is going to happen to them. They're still going to work. And OCL's financial services like loan and insurance distribution and equity broking, they're still going to function. And as I mentioned earlier, Paytm has said that it is taking immediate steps to work in compliance with the RBI's rules and regulations. And if it is able to comply with the rules and regulations of RBI, it may even receive some relaxation. But at this point of time, we know that these restrictions that are imposed by the RBI on the Paytm Payments Bank Limited, they're going to hamper a lot of their operations. But it is also important for us to note that a lot of investors, they've lost their money by investing in Paytm. Even more so after Paytm's IPO, which launched at about 2000 rupees and is currently trading at around 487 rupees. So a lot of people have lost a lot of money in Paytm. So what do you think is going to happen to Paytm Payments Bank Limited and Paytm as a whole? Do you think that Paytm's operations are going to suffer a lot, or will Paytm find a way to work with the RBI? Let me know your thoughts below. If you found this video valuable, please share this video with your friends and family, and please subscribe to our YouTube channel. Thank you for watching this video and have a great day.